The market has been so volatile lately, and you really want to learn how to profit in such market conditions, but you don't know how. So you watch from the sidelines and you regret the missed trading opportunities. Or worse, you jump in and you lose significant money because you don't know what you're doing. Well, in this video, we're going to change all of that. We're going to teach you how to trade a particular setup that's rarely taught to independent and retail traders. So stick around and get ready to learn so you grow your trading account. Hi, I'm Mike Bellafiore, managing partner of S&B Capital. We're a proprietary trading firm located in Midtown Manhattan, and I'm also the author of the trading classic, One Good Trade and the Playbook. Click our subscribe button so you don't miss any of our trading videos that we're producing for you, for the trading community. In this video, you're going to learn how to make a market play trade, to trade the overall market, as we say. You're also going to learn when to make this trade, what products to trade while you're making this trade, what indicators to watch, how to set your exits for this particular trade, how we made this trade with a specific trade example from our trading desk. So stick around. This is an important trade to learn with huge potential upside that honestly few independent and retail traders are ever taught. If you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running right now. Just go ahead and click the link that should be appearing now at the top right-hand corner of your screen. That will open the free registration page in a new window, so don't worry, you're not going to lose this video. Hey, just go ahead and do it now before you forget. You're going to learn more in a couple of hours from this important trading workshop than from years of online education. A market play breakout trade has the following variables. You want it to be above a key technical level. We prefer that this happens during a trend day. We want an elevated VIX futures. We want increased volume into the breakout. We want declining volume into the pull-in. Preferable if we're holding above VWAP during the intraday. We want RVOL to be high, relative volume. We want to see positive tick readings as this stock is, as these products in this case are breaking out. We want the ADD line, the advanced decline line, to be trending higher. And we want breadth of strengths in other indexes if we can get them. The pros of the market trade are that this is highly scalable. The most liquid stocks, products are being traded. This is an everlasting trade. You learn this trade, it's always going to be there. This is not something that's going to get HFT'd out of the marketplace. We're going to have an excellent risk reward in this trade. We're going to have an outside return on investment for this trade. If you can trade this, trade, you really can trade anything. It's a trade made by the biggest traders in the world. So when do you make the market play? When do you make these market play trades? When VIX gets above 15, that gets us very interested. When VIX is above 20, then we're making market play trades. When VIX was above 20 recently, I went into our training room and directed our developing traders to only trade market products. That's what they were to focus on. What do we trade? All right, Bella, you want us to make market plays. what are those products that we should be trading? SPY, Qs, IWM, VXX, that's a volatility product. UVXY, that's a volatility product. Don't spread yourself too thin. So recently when I walked into our training room before the open, before we made the trade that we're going to talk about, counsel the guys not to do too much. You ought to be able to handle being able to trade SPY, Qs, IWM, VXX, UVXY at the start. And look, if you can't, and you can only trade SPY and VXX, then stick with that. And I'm purposely not including all the things that you could trade, because that's really more for very, very experienced traders who might also add market stocks, gold, the dollar, oil, to their market play trades. And as you get more advanced, you can too. But this is where we got to start. This is what we got to master first. We can't be looking at too much stuff. All right, so we said we wanted a key technical level to make a market play trade. We're trading the overall market. Normally we trade stocks in play, right? Normally we look for stocks that have unusually good and unexpected news, or unusually bad and unexpected news. And our thesis is they're going to move independently stronger or weaker than the market. They are going to give us excellent risk rewards and an excellent ROI on our capital on an intraday basis. And so we stick to that. And we stick to that on most trading days, a very high percentage of trading days. But there are those days when we want to trade the overall market. There are those days when we're not going to focus on the stocks in play. We're going to focus on the overall market. And that is when VIX is elevated and when we have key technical levels to trade against. Boy, that really gets us interested. In this case, we were hawking this 277 SPY resistance level, this key technical level. It can't get above 277 once and twice and 3 times and 4 times and 5 times and 6 times and 7 times and 8 times and 9 times over the past 5 trading sessions. And during these past 5 trading sessions, the market overall had been incredibly volatile. And I said this to our developing traders here. This level becomes even more important because it was the resistance level that was put in when the volatility exploded. And so when the volatility explodes, if we can go look at the resistance levels from those time periods, they become even more important. A technical note, and giving credit to our friends at Instinet, a wedge pattern was identified by one of their CMTs. It is pointing out that that key resistance level in SPX, and if we can get above there, we could go all the way back up to 28.25 for SPX. And so we were looking at SPYs, and this is a corresponding chart for those who were interested in looking at futures. And so this key technical level was setting up on our futures and in our SPYs. And you get that really important wedge pattern that we talk about a lot here. We call it the big dog trade. And for those of you who don't know what the big dog trade is, go and watch our free webinar and get yourself acquainted with the big dog trade. Turned one of our traders into a 7-figure trader with just that trade. And this is a classic classic wedge pattern setting up a big dog trade. All right, so we want a trend day. A trend day is helpful to us. We want the market gapping up, and in this case we did. We want the market trading above its opening range, and on this day we are. And we want to be showing strength with an opening drive to the upside on good volume, suggesting that we're going to trade higher into close. So we have this trend day. Our trade management for this trade. We want to buy above 277. That's our key technical level. We want to buy into that pullback into VWAP. And then we want to buy above the new high that was created. So there's different ways that you can do this, but the trade signals are buy above 277 because that was our key technical resistance level. People are getting long above 277, right? So we got above 277 and people are getting long, 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 long. And we pull in, make a little bit of a lower high. There was some resistance here at 277.40, which I'll actually show you guys. And but we're pretty far away from VWAP here. We get above 277, but we're really far away from VWAP here. And all the people that got long above 277 are going to be challenged as to whether or not they can stay in the stock. So this move below 277 doesn't mean the stock failed to break out above 277. We traveled a long distance to get to 277, and we've got some people, and particularly the tape was showing us there was some chasing going on here. It's just too far away from where it started. There's just some chasing going on here. And all these people who are chasing up here, they got to get tested. And they do. They get tested below here. And this move back into VWAP is just that. It's not, hey, we failed here. And that's why reading the tape is an incredibly important skill. When we were watching this, the first time at the 277, I thought we were going to fail and pull into VWAP. And we didn't. And we got above it, so I bought some. But I was recognizing and thinking through my head, hey, what are some of the possibilities? Well, some of the possibilities are all the people that are chasing up here, they got to get tested, and the real buy may be into VWAP. And that's what happened. That's what happened. We pull into VWAP. The reason why we're buying into VWAP right here is because we really like the way the stock moved above 277. It got above 277 with good tick readings. It had good volume above 277. We had good breadth in the other indices. Our thesis overall was leaning long because we felt some people were short trapped. And when we pulled into VWAP, we got some tick readings that suggested that that was the end of the pull-in. And so we're going to give it a run here for tier 3. And then we're confirming, tier 3, we're confirming that we're right. We've now cleared the resistance level that we saw at 277, and so we're going to add some risk. Let's talk a little bit more about that. So the best trader on our desk is Shark, and it's important to study the best traders, and we'll share with you what he did. And while I'm trading, I'm looking at what the top traders are doing. I'm looking at what a lot of traders are doing so I can give them the best feedback. And so I was watching carefully what he was doing as well. And SPY, we're talking about buying SPY right here, but when we make a market play, we talked about how we can buy SPY, Qs, IWM, short VXX, short UVXY. And we can spread out a risk amongst them. And the reason why we might want to spread out our risk amongst them is that we're not sure which ones are going to be the best. We want to be long the market. We want risk into the market, but we're not sure if IWM is going to be the strongest, or Q is going to be the strongest, or SPYs are going to be the strongest, or volatility is going to be the weakest. So we spread out a risk amongst all of them and give it a run. And that's what Shark did. And so in his case, he bought a little bit. He bought across the board. He bought SPYs, IWM, Qs. He essentially bought the equivalent of about 10,000 shares of all of these across the board. long SPY, long IWM, long Qs, short volatility, okay? Short VXX, short UVXY. And he also did one extra thing, which I found to be particularly impressive, is that he didn't just express his risk on with the market trade with stocks, but he also used options, which was really, I was really impressed with that. And so he bought some above SPY 277, but he bought most into the pull-in into VWAP. So that, watched the break, but bought most here, risk on here. And it was a trade to hold, selling into the close. So we got that break above 277. And what we want to look at above 277 to confirm whether or not it's going to be good is we want to see increasing volume. When you have a breakout trade, you want to see increasing volume, which we get. You want to see a big push away from price. Got to move about 50 cents. You want to see declining volume into the pull-in. We're getting that. We're getting declining volume into the pull-up into VWAP. We want to see tick readings when we get above this 277 to be positive. We want them to be very positive, showing us that there's breadth of market. We want to see Qs and IWM doing really well. It's key to really watch what's going on in the marketplace above this 277 level. We want that increased volume. We want to see what RVOL is. We want elevated RVOL. Even in our ETF products, we want them trading well above 1. We want to see that RVOL also in Qs and IWM, indicating that there's breadth of buying. But if you're trading this breakout at 277, we noticed had trouble at 277.40. And I was saying on the desk, hey, for whatever reason, we're having trouble here at 277.40, and we've got a trade decision to make with our risk on in the marketplace above 277. Our decision is to get flat. Our decision is to lighten up. Our decision is to do nothing and hold and think this is a temporary resting spot for which we're going to clear into a pull-in. And what we really want to do is focus on buying the pull-in and adding more risk to our position at better prices than worry so much about selling here at 277.40. And if we think that we can get all the way up to 280, it's worth us holding all of our position, all of our core, because we don't want to miss and have the market get away from us without our ability to add and be big enough. So you've got a trade decision here. Big failure, big. You had to notice that. I mean, the tape was pretty clear, and we were saying, wow, they're selling here, they're selling here, they're selling here. We've got a trade decision, and we made our trade decision. As we pull into VWAP, we get that declining volume. We get that really nice hold. Get that really nice hold here on VWAP. So we're going to look at the tick readings as we're trading. All right, and so you can look at $TICK and what is going on. So we want to know as we're pulling into VWAP what's going on around this 1030 level. When we break out above 277 around 10 o'clock, we want to see what the tick readings are from 10 to 1020. We want them to be mostly positive. And so we take a look at what's going on from 10 o'clock to 1020. And right down here, we've got the overlay of the tick charts. And so you can see they're very positive. We're getting a lot of positive ticks. We're getting 800 ticks and 800 ticks and 800 ticks. Those are very strong indicators for us. And we talked about, so tick is one of those indicators we want to look at, and it's acting nicely. We want to look at ADD, our advanced decline line. That was trending up very nicely. That was trending up really, really nicely during the day too, and that gave us, when we get above 277, we want to see that trending up. All right, and then, all right, we're going to pull in to VWAP around 1030. So we're pulling in to 230, we're not really getting those extremely negative ticks. We get something a little bit out of the ordinary, but we're barely able to get negative tick readings. Then we get a little bit of a blow off, We're not getting those negative tick readings. So that's good. It's good to look at tick and learn how to use that. What's really important is, all right, we got stuck up here at 277.40. What do we do when we get above there? If we're going to hold our core all the way back into VWAP, we've essentially held it from 40 cents into 60 cents. We've let 80 cents of some decent size trade against us. When we get above 277.40, we have to add more size. So we want to add size when the SPY makes this new high, and certainly think about adding even more when it consolidates above there. But we want to add more. And when I say we want to add more risk, what I mean by that is we want to add more risk across the board. We want to add more risk on Qs, IWM, VXX, UVXY, across the board. We want to get those other products at good prices, but it's added risk. We have a guest from India visiting us right now and studying with us. He is a market technician and works at a big bank over in India, providing commentary and technical signals for big traders over there. We were walking to lunch the other day, grabbing a salad, and he said, "Your traders are so aggressive when they see their trade." He was amazed at how big they get when they spot their edge. Well, when we spot our edge, we really want to put our risk on. When we spot our edge, we really want to put our risk on. It's okay to lose and lose money in marketplace. It is too risky not to put on risk and a lot of risk, more risk, when we see our edge. You've got to do it. You have got to do it. If you see your edge, go for it. When you spot your edge, be aggressive. The biggest traders in the short-term trading space, the short-term active trading space throughout the world that I work with are all aggressive when they spot their edge. Or they're working on being more aggressive. They're working on, as long as liquidity is there, adding more risk to their A+ setups when they see it, as long as liquidity is there. So we want to add risk. We don't want to just buy the SPYs. We want to buy the SPYs, the Qs, IWM, VXX, UVXY. And so when we're getting these signals, I just want to clarify this. So when we're getting these signals for SPY, tier 1, we're buying across the board. SPY, Q, UVXY, VXX. We're looking at charts to figure out the best spots to buy each of them at. So we're putting bids in at good prices, but we're spreading risk across all of them. Okay, and when we get here, we want to add more risk. We want to add more risk to Qs. So we're buying above 277, we're buying some Qs. We're buying into pullback and adding on some more risk. And when SPY makes a new high, we're adding more risk to Qs as well. We want to add some risk by buying IWM. We're buying IWM when we get above 277. We're buying into VWAP, and we're buying above the breakout. We're shorting UVXY. Volatility should go down when the market goes back up, particularly after volatility is elevated. In fact, some people really focus on UVXY and VXX when the market is in play. Some people only trade VXX or VXX and UVXY when the market is volatile, and they'll really slap into it. UVXY and VXX will go down more on a percentage basis than the overall market will go up. All right, so we want to add risk to our volatility instruments. The indicators to watch: volume into the breakout, tick, ADD, ARVL, and other ETFs. This is a trade to hold. Our exit is target 1. In this case, 2800 SPX. These are the last failure areas from the big down move that we had. We've got a couple of Fibonacci targets, thanks to our friends from Instinet. A really nice technical note put out during this time period by Instinet. The first Fibonacci was just below 2800. The second was 2825, and if you go look at where we ended up going up to, those were very important levels. So really good work by our market technician friends there. All right, so what you learned, and look, and exits can be different than just targets. In this case, we're not going to go over all of the targets. Not going to go over all of the exit plans, but in this case, our target was our exit plan, which ended up being selling into the close on the same day, the same particular day. All right, what you learned: how to trade a market play breakout trade, what products to trade during this market play breakout trade, what indicators to watch during a market play, how to set your exits during a market play, and how to think through your trades like a pro. You can take what we've learned here and not just apply them to market play breakout trades, but there's enough here for you to take what you've learned and also make them into market plays overall. You don't have to just look at a market play breakout trade. There's enough here for you to make a series of market play playbooks for your trading. And the mirror image of this is certainly a market play breakdown trade. So there's a lot of goodness in here. And again, I always hope that these videos that we're making for the community, for you, so that you can grow your trading account, so that you can improve as a trader, is that you're learning how to think through trades like a pro. Go ahead and click our subscribe button so you don't miss any of our trading videos that we're producing for you in the trading community. Please add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at SMB, trade well.